Hello guys, hope you are doing well. So I'm sorry for not letting you know before that we have a live. So this live will be also short. I don't want to go for more than half an hour or 1 hour, depends on the guys here. So today is a very special live. I will be dealing with the game of stocks and the mystery of price. This is the first thing I was interested in the stock market. Everybody, hello Fabian, hello Wiseman, thank you very much for coming. Sorry guys, I didn't put the live before. I was traveling all these weeks. And the coming weeks I will be traveling a lot, so I will have a lot of things to do. So guys, for this week, it's I'm not saying it is a strange week, but when you see the stock market, as I told you before, it will be very volatile. And Monday, this last Monday, was the 9th of November 2020, was a very, very volatile day. So why I speak today about the game of stocks and this mystery of price is that people think that there is like a magic strategy or a magic formula that you can do and you make always money without having risk. And this is not true. Always, whenever you buy a stock, there is risk. Either you make money or you lose money. This is a basic of trading, and most of the people who are into stocks for many years, they realize that. Okay? So first, when you bet on a stock, you should always expect either a good outcome from this bet or there is something bad happen. So either ways, you should accept that. This is the most important thing. And try not to take this hope idea from your mind that you always, when you buy, you want your stocks going up, and this is not true. Okay? But in general, if you see the whole year work that you have traded, if you are making money, it means in general that you have understood the game of stocks. It means trading stocks. You have understood and 80% or 90% of what's going on. Okay? The 10% is unpredictable, like what did happen on Monday. Yes, Wiseman, you say price never lies. Yes, I always say that because what you see is what you get. It means when you see the price, let's say you buy let's say, just I give you an example of Dow Jones. Let's say you buy Dow Jones ETF, which is the DIA, and on Monday you see a gap up in the whole 30 stocks. Most of them, they go into a gap up, and you see that. Okay? So you will be happy to see that. You don't expect that Dow Jones, almost all the stocks have a gap up, which is for some people strange, but for me it has never been something which is new for me, because I always expect either a gap up or gap down, or a good thing or bad thing. I always expect that, so I don't worry a lot about making money or losing money in every stock, because you should not focus on each stock by itself. You should always think about the whole thing, about what you do in the whole. You will have some stocks that are bad, okay? But when you exit early, you will see that they don't affect too much your making profits. Always we have a profit when you keep and you hold with the good stocks, and sometimes when something happen bad, so there is no problem with that because you can't change it. Now, if you are just there are two things. Either you are in the stock or you are out of it. You are out of it, it means you are just watching. Some people, they told me, okay, I have been studying stock market for 6 months, 1 year. Well, what do you mean by you study and you are outside? When you are outside, you are doing nothing. You are doing nothing. You see stocks going up and you didn't buy. You see stocks going down and you didn't short. So what are you doing in the stock market? Studying what? Because the price sometimes it's going up, sometimes it's going down. So it will never happen the same exact thing. That's why I have one of the guys here before. He told me, "Oh, I am waiting for a downtrend like before, like you explained, like I explained before, and I will buy from the bottom." So I told him, what if the stock market has gone for many years without getting down like what did happen this year, or what did happen 2008, or in other years? What will you do? Are you going to not to trade because of that, or you are not going to invest because of that? This is the type of mindset that makes you lose, because when you see everything is going up, you don't buy. And you are waiting for something that maybe it doesn't come. That's why when we see the mystery of the price, this is what makes me before interested in the stock market. I was naive like anybody else. I have before. I discovered the stock market late. It means I was not 20 years or 25 years like some people here. That get interested because of the environment. For me, I was living in Algeria, which is in North Africa, and we don't have stock market at all. Okay, we don't have it. So this idea of going public and companies that go public and stocks that go up and go down doesn't exist in my country. Now, when I come here to America, I didn't realize anything. I thought that investing in a company, I get a flu idea, just a naive idea that when you invest a share in a company and later it grows good and you can make money. This idea is true, but it was a naive idea. Okay, naive, it means just something that most of the people think about it, but they don't know what's inside, what's going on in this stock market. Now, when I am speaking about this, the mystery of price, understand that there are guys who change the market as they like. For me, I always tell that it is Wall Street guys. Now, wherever who are these Wall Street guys, and all the traders participate. It's not just Wall Street guys. Wall Street guys, what they do is they initiate something, and the people they follow. That's why they can make a lot of money. Now, I just give you an example. Who can move the whole market into a gap up? You see Dow Jones? I will just show you Dow Jones on Monday, if things go. So please, guys, check this. So take the Dow Jones. Now, do you see Dow Jones? Do you see this big gap up from 283 on Friday, and it goes to 199? You see this gap up? Generally, Dow Jones doesn't have a gap up. Okay, you see how strong it is. Now, and you see that, for example, other stocks. Let's say we take an example of a stock. Okay, this is Friday, this is Monday. You see, for example, Zoom, how he lost. Zoom was 500. It goes to, from 500, it goes to 400. Okay, 20% lost for Zoom in that day. Okay, where Dow Jones, the biggest stocks, have been going up. So you understand. You ask yourself, as always, you ask yourself, what's going on? What makes the Dow Jones stocks and thousands of stocks go up into a gap up? And what makes some other thousands of stocks going into a gap down? So you understand here there is a game. Now, if you understand this game, that you can't control stocks. If you are, for example, let's say you bought this ETF, Dow Jones. You always buy ETF and you say, okay, it's the average of almost the biggest stocks in America, so I want just to invest in an ETF, because there are some people who invest in ETF. They don't get that much and they don't lose that much. It means it's the average of the whole market. When we say the 30 stocks, the 30 biggest stocks, okay? So we are speaking about the average. We are not speaking about the best stocks in the market and not the worst stocks in the market. We are just speaking about the average. Okay? And you can see that some stocks are doing excellent, which we have a gap up, and you see some stocks on Monday that you have a gap down. So you ask yourself, what the heck? What did happen? And you go to CNN, CNBC, and they begin to give you this mysterious reasons why. It's just because the stock market goes into a gap up like Dow Jones because of this and that and this and that. It means they give you reasons for that. But what if the stock market go down into a gap down? They will always find something to tell you. But in real, it is not like that. Okay? So sometimes I will tell you why it's not like that. Sometimes a stock gets a good earning news, and you think that it should be because of the good news. You think it's a gap up. Now next day you find it is a gap down. Okay? So this idea of you should always go and expect something, this is not true. So for me, when you expect something, try always to accept what the market gives you. For example, you are in Zoom and you lost 20% in one day, because in Friday it was 500, and then on Monday all the stocks are going up. And you are happy, you see, oh, the market is having all gap up. And you see your stock, you find that you lost 20%. You see the game? This is the game that I am speaking always about. So it depends where you are. But for me, either you lose money or you make money. Try not to get upset because of losing money. I know when you get money and you get a gap up in some of your stocks, you will be happy to see that. I know. And most of the people are. But sometimes when you get a gap down, you get upset and you say, why? And why my stock is having gap down and all the market is going up. So this is what I call the mystery of price. price is changed by big guys. Now, big guys, they decide for the market for each day. Okay? They decide. Now, for me, I don't know who are these Wall Street guys that they change the thing, but they exist. They are real people. Okay? Moving the whole market into a gap up or gap down, it is what they do. But understand that there are millions of traders who follow them. It means, for example, these Wall Street guys, they just initiate something. If they push the stock up, everybody, because this news comes in on Friday afternoon after the market close. So they say, okay, let's push the stock market up too much because there is a gap up. You can just imagine that Dow Jones, the whole index has a gap up. It means something real has happened. It means they push it so hard up. Okay? Now, but understand that these guys, they have already sold on Friday. Understand that Wall Street guys, they don't stay many days. There are other guys or hedge funds, they stay many days or many months, yes. When there is a big move in the market, up or down, uptrend or downtrend, yes. But there are some people, they work as a day work, which is day traders. Okay? They move it up and they exit because they don't want to see what will happen next day. They will not be at next day. And most of these people, this has a relation with interest rate. Understand that if you keep your stock to tomorrow and you use, for example, you use the margin account, you get to incur some interest rate. So almost day traders, they don't want to have interest rate. It means it is a charge, okay, whatever percentage is. So they don't want that. That's why they buy and they sell. For example, when you see a gap up, let's say the news at 5 o'clock. So when it comes 5 o'clock and they think they should push the market, they begin to buy. Now, there are people who are waiting for the earning news or they are waiting for anything that moves. And this, you can get it by alerts or you are following news. There are some people who pay for this news. Okay? To pay for news, it means wherever something happened in the market, you get the news at first. And then when you get the news, you just get to check the price of this ETF or index or stock. You just see. Okay? So you will be with the first, and you can bet on this index, in this stock. Either you sell it short or you go up, but there is a big risk, so you should be with the risk. But most of the people, when they do that in 1 hour, 2 hours, 3 hours before 8 o'clock p.m. Okay? Because if you want to follow what did happen from 4 o'clock on Friday, when the market closed, to 8 p.m., you will see that. You will see that we have high volume. It's the same thing as earning news. Always there is a high volume because all the people follow news. If you are a day trader, you should or you must follow news in order to make big money, because it's always big. And sometimes you find stocks that have gap up. These gap ups, there are people who are following them. So if you are a day trader, you should get interested in the news, because this is what moves the stocks. And I told you, there are some guys, big guys, they have billions of dollars. Either they are hedge funds or they are whatever they are. They push the market too much, so everybody will follow. Okay? It's like when you see a trend like us. Empty Mirar say, hello Kareem, happy Diwali from India. Happy Diwali. I don't understand what does it mean, Diwali. Thank you very much, Empty Mirar. So as I told you, if you have been into stocks this week, you will see this big change, and the market is divided into two things in the same day. Some they get gap up, some other stocks they get gap down, and each one they give you a reason. Okay, so this is what is funny, is that I find some stocks that are online, like anything that it is online, like Zoom, like what do they say? Oh, not Zoom, the other e-commerce, like Amazon, e-commerce websites like Amazon, like Apple, like anything online that sells, and we have a lot of big sale. They say, oh, it's Black Friday. It's Black Friday, and the traders or the investors think that these websites will collapse because of a lot of buys and a lot of sells. This is stupid. For me, this is stupid as a reason. For example, Zoom has no relation with this e-commerce. It doesn't sell, it doesn't buy. So why we have 20% down? And you can go and you find a lot of stocks that are having a gap down. You can check that. You can take all the stocks and you click on them and you see Monday. Has it a gap up or gap down? You can't just give any reason to explain that. So that's why, guys, I told you that the reasons are told in order to attract people and to give them a reason. But I'm telling you that in the stock market, for me, it shouldn't be always having a reason. The reason is the people they buy. If it gets a gap down, it's just because the people they sell short, either with a reason or without a reason. So if someone tells me there is a reason, but this doesn't help me trade, okay? It doesn't help me trade. It doesn't give me any new information that I can use in order to make money. It's a past information. Past information, I don't need it. Okay? Ilaya Palavan say, I love you. I love you also. Ilaya, I don't know who are you, but I love you also. Nasa, hello everybody. How to control greed in the markets. Look at the charts, not the news. Yes. But understand, Bobby, when you say look at the charts, not the news, it's true. It's true. But when you are a day trader, you should look at the news and see what's going on. Okay? Sometimes it is good news, but the stocks sink. They go down. So it's not the good news or the bad news. It is what the traders have done. What is their perception? And this is what I always ask my students, is to look at the chart always. Especially when there are news. You should look. If it is good, just try to buy. Don't buy too much. Just buy and wait. If you are correct, you will make money like everybody else. But it's not you put all your money in something in news and then the next day you find that it is the opposite what you expected and you lose a lot of money. So you should not be going like this, like crazy. And as NASA said, how to control greed in the markets. Now, greed in the markets is you think about a sure thing. And this I hate. Even from my students, when I have one student, because he traded a stock and he believes in the fundamentals of this company, and I always text him and he texts me about what's happening, and he is always giving me these fundamentals. I say, man, stop thinking about these fundamentals. If you want to invest in this company, invest in it because you like it, you have a lot of information, invest, but do not trade. Okay? Because if you invest in a good company that you think it's good, and you know better than me, because for me, I don't know companies. It means I can know some like these, but I am not going to follow fundamentals because I don't invest. In general, I don't invest in the stock market. It means I don't buy and leave it for 10 years or 20 years. Okay? So understand, guys, that you should not mix trading and investing, because when you do that, you get confused and you have what we call greed. Now, this greed, what is it? It means you think to outsmart the market. You think that the market will do what you ask, and this is the big problem. Okay? Because the CEO is a genius. He told me the CEO is genius. I say, man, stop saying that this CEO is a genius and he will save the world. Stop saying that, because it's not true. It's not true. Okay? So stop believing in fundamentals. Now, if you believe in fundamentals, you should go to investing. You know some companies, you like them, you see that they are developing very fast, the stock is going up very fast, they are making money. Yeah, okay, go just invest in them. What you are waiting for? But don't tell me that this company, the company, he said that we will do this and this and this and that's why I bought the stock. This is stupid. Okay, this is stupid, and you will pay for that. You will pay hard from your money because you believe in what the people say. Never believe someone, like, especially in fundamentals. There are some companies, you understand that there are a lot of companies that they go bankrupt this year. For example, this year, a lot of companies, thousands of companies, they go bankrupt this year. Okay? Do you believe that there are billions of money lost to investors because they don't know? They don't know the company is sinking, and the CEOs are always saying we are good, we are making changes, the company will be good. Don't look at the price. That's why some people are stupid in their mindset. How a stock a company was $100. Now it is $2, and you tell me that you are still hoping the company will do good. And then when you go bankrupt, all your money is lost. So understand that investing as a vehicle of making money, okay? It's not try to see, for example, Warren Buffett. Okay? Try to see like Warren Buffett. He has been investing in Berkshire Hathaway for 20 years, and the mills, he was buying all these kind of mills, to make textile and the other stuff. But that industry, although he knows economy, he study economy, he knows a lot. But as an investor, he was mistaken. He said after 20 years, it was my biggest loss, this Berkshire Hathaway. That's why later, after 20 years, he's mistaken. He understood that he should sell everything for this Berkshire Hathaway and buy insurance, like buy other Coca-Cola, he buys Geico, he buys other things. That he finds money and he begins to make wealth. Okay? So, when you do a mistake, you should correct it right away when you know it. For example, you invest in a company for 10 years, but you see that your company is not making you money. You are losing money. How can you stay in this company? And the CEO and the other analysts trying to fool you and to tell you, okay, man, just hold, because next year there are new plans to change the company, to change products, to change things, and we will be making money and will become. But the stock was $100. Today is $200. It was $100. Today is $2. I have been in these 3 years. A lot of people, they send me emails and ask me, oh, okay, what do you think about this company I am investing in? The stock was $45. Now it is $1. What do you think? Should I hold? I said, what do you hold? The company was $45. Now it is $1. What do you hold? What is the thing you hold for? Are you still waiting that the CEO send you an email and say we are okay? You lost almost all your money. You lost 98% of your money, and you are still holding for the company. This is because people, they love the company that they invest in. They love it, so they become not serious about trading, about investing. They are not serious. They involve feelings into a business. When you are into a business and you see that there is no money coming and you are losing money, if you stay, you are just wasting your time. Okay? So it's time to change something, to change the business, or to change the way you do business. And when you change, things will change for you. But if you keep doing the same thing, you will have the same problem. NASA said, I have seen a lot of day traders lose all their money in one or two stocks by short selling. One guy lost 400 tons by swing shorting. FVO and ONC, 2 years of profit gone. Yes. NASA, there are some people, some traders who are crazy. They do crazy trades, yes. But, they know, but most of the time they know they are doing crazy things. And they believe in their capabilities as traders to make money. But, people, they do whatever they want with their money. Sometimes with this $400,000, sometimes in other trades, they can make 1 million or 2 million. That's why they go so bad about this kind of greed. Okay? They want a lot of money on a shorter time. Most of the traders want that. Okay? They want money as if they come to the market, they harvest all the money that it is in the market each time they do a trade. This is stupid. Okay? And if you don't do good money management and good positions in your account, you will face a lot of problems, and you will lose instead of making money. Elia Palavan, how to become millionaire fast via option selling? Yes, become millionaire. Who have you seen become millionaire about selling options? Options is 100% risk. If you put $100,000 today, you sell options. Tomorrow things change into a gap up or gap down, the opposite side, you will lose on your money. So stop thinking about this. This is the guys I'm talking to you, Yaya Paravan. I'm just talking about you, man. Talking about you. Talking about people who want to become millionaire very fast. The market is not meant to make millions of dollars very quick without having money or without a quick thing. Like what they say, flip stocks and flip houses, flip, I don't know what they flip. Okay, it's like something which is a magical formula, and you begin to make money. Stock market, it is not like that. Stock market is for true traders who know what they are doing and try always to see the risk, to not put all their money into one stock, and to behave like people who are serious about their trading. Okay, so as Bobby Sickler said, date a stock, don't marry it. Yes, a stock, it's you bet on a stock. You bet on it. That's it. Like someone when he dates a woman, like no, okay? You will never know if it's good or bad until you buy. So later you will decide either to stay and you marry, or you just get away, and that's it. So the stocks are like that, because you are not doing investing. It is another thing. So don't confuse trading with investing. Investing is, you should know the company, you should know the competition, you should know how much money they make, you should follow the earnings and what the analysts say in general. Don't believe them, but try just to see what they say about this company. You try to see the price, because what makes you the money is not what the CEO has said to you or the analyst. It's the price. If the price doesn't move up, how can you make money? Okay? Some people, they just buy a big company that it is well known, and then you can make money. No, it's not like this. If the stock doesn't move, so most of the time you are losing money. Wiseman said long-term investing is long-term relationship, but no marriage. Yes, but understand that Warren Buffett, as his way of doing business, he likes big companies that has a future, and he has some criteria to choose companies, and if they succeed, they will stay. Okay? For example, Warren Buffett, I think he bought Coca-Cola when it is small. Until now, he is with it. And when you ask why do you buy Coca-Cola? Because it makes 1 billion bottle of Coca-Cola each day, because it is making money. The company is making money. Okay, but he bought it when it was small company. Understand that Warren Buffett, he buys companies when they were small. Okay. Sometimes when the companies are big, like he bought Apple, it's just because he changed his mind after all his life. He doesn't like this .com companies like Facebook or Twitter or anything that it is he doesn't understand how do they do it, or how he can make money, or how. Because they see it very volatile. Because understand, Warren Buffett, he doesn't want a stock that goes 100% a year and the next day it goes 100% down, like technology stocks. That's why he was scared. But he likes something that moves slowly but efficiently in order to make money, because he has big money in it. It's not like flying stocks like .com or any stock that it is $1, like Apple at first, which was $1, it goes to $700 or $1,000 or whatever it goes to. So he doesn't like that, because he put billions of dollars in each company, and that's why he was scared to lose all these businesses in a few days. Because there are some companies in the beginning of 20s, in 2000. What we call big .com companies. Any company that is .com, it goes to stock market, it flies. $1 it goes to $20, $100, $200. So it was at that time, it was a bubble. It was something which is unbelievable. How the stocks go up. It It's just the way things were at that time. That's why some people become millionaires without knowing anything at that time, where things were just someone puts $5,000 or $10,000 and then it becomes 100,000, 200,000, 300,000. They can make a lot of money like this. But those days, other people, they put $10,000 or $100,000 and they have been wiped out. The company go bankrupt and they lose all their money in few days because they don't know anything about the company. They just try to invest. Saba said, biggest secret is patience in trading. Do I always need a stop loss? So Scott Brassel, do I always need a stop loss? Now, for the stop loss, you should listen. You should always know where to exit when things were wrong. Okay? Always have an idea where you exit. Now, I'll give you an example, Scott Brassel, in order to have an idea. When you buy a stock, let's say you bought it at $20. Now, if it is going down, when do you exit? Don't tell me I will not exit. Because if you buy at $20 and it goes to $10 after 1 month or 2 or 3, you are investing. You are investing. You are not doing a trade. So first, Scott Brassel, you should have this idea, a distinction between investing and trading. Trading, you bet on a stock to make money in a few days or few weeks or few months, like we do swing trading. We follow trends. So when I buy a stock, I need to make money. But if the stock is against me, you should have an idea where to exit. This is a stop loss. Now, if you tell me I don't need it, it means if you buy a stock at $20, it goes to $1 after 1 month or 2 or 3. You are okay with that? It's your problem. It means you will be losing all your money in a few months. And this is what happened to everybody. That's why your question, Scott Brassel, your question is a very, very important question. If you are into a losing position, you should exit. And some people, they told me before, we don't exit because when we exit, we have a loss. This is a stupid thinking. If you bought a stock at $10, at $20, now it is $10, and you are telling me that you don't lose 50% of your money? So how much you lose in real? How much you lose? You don't lose? This idea that you don't lose because you don't sell, this is a stupid idea. And a lot of people, they go bankrupt in their investing, especially in investing. They like some companies and they say they have a future. After 10 years, 20 years, he put $100,000 and then these stocks because they're going down until he loses or he lost all his money. Okay? Following these analysts and the CEO that the company is doing good and the perspective next week will be good, better than this year, and we are making this and this and that. Now, where is it, this thing? Where is it? $20, it becomes $10. Where is this information? Where is these good things? If a CEO tells you that we have done good, you should see the stock from 20 going to $40, $50, $60. It means that it is attractive to other investors. That's why when the investors, they come to a company, they buy, the stock will go up. Don't tell me it's a good company and the price is going down and down and down and down. It go to bankruptcy. And the people, they don't understand this idea. That's why they lose money in investing and in trading. So Scott Brassel, you should be serious about stop loss. You can check training level. You can check training. level 6 in my website. You go to my website, Djellala.net, you go to ebooks or to videos, and you check my training about that. It explains to you into details what you should do in having stop loss. And stop loss, it doesn't mean that you should put it in the broker physical. It means you put stop loss at what time. No, you can just put an alert when it reaches that price, you sell. You just go to your account and you sell. Okay, you don't need just to put it. So this is what most of the people they do. Okay. Now, Elia say how to make money in stock selling, short selling in market crash. How to get other traders money. Yes, Elia Palavan, you should know how to trade. You should study this. There are trainings, so you can get training level 11, how to sell short a stock, and you see the techniques and you say how to do it. But selling short is for intermediate and advanced students. If you are a beginner, stop playing with selling short, because you can lose all your money and you will be in debt. Because selling short is more dangerous than going long. Selling short, you are selling, and if you want little risk, you can do it in the day only. Don't hold tonight, overnight your stocks if you are selling short, because it is so dangerous. Because at least you see what's going on in order to exit. Okay, but if you are a beginner, stop thinking about selling short. It's very dangerous thing, and you can be in debt. Not just you lose all your money, but you can be in debt. Okay? If the stock is, let's say, is $5, and you see the stock is going down for a long time, and then you want to sell short, you sell short, and tomorrow it was $5 going down, and tomorrow you find it $20. Do you understand what does it mean when it has a gap up? It means that you lost all your money, which is $5 for each share you bought, and then you have to come up with 3 times your money. If you put $5,000, you lose it, and you should come up with $15,000 to the broker. So you understand that selling short is not a game for beginners. Understand that there is a big risk. It's not as you see in some videos, becoming a millionaire and selling short. Okay? So understand that there is a big game here. So the game of stocks, always try to understand that there is no guarantee in whatsoever when you bet on stocks. Now, the proof of that you see on last Monday. Some stocks they have a gap up. Some stocks they have a gap down, which has never come. I have never seen a day like last Monday. Okay, some stocks they have a gap up, and others they have a gap down, and there are a lot. So it depends when you are. If you are in a stock that has a gap up, you have a gap up. If you are in the gap down, you get a gap down. Okay. And this thing, guys, these things that I'm speaking about is you try to do your best to understand these things. If you don't understand and you still have this idea of a sure thing, you will have always problems in the stock market. That's why forget about all what they say, forget about the reasons. You should check the chart. Where is the stock price going? Where is it going? So you should deal with that. Because news, they can come today or tomorrow and they leave. And sometimes the stock has gap up, sometimes gap down, sometimes goes up, goes down. But this is not so important. What is important is to follow the trends, like what we do as a swing trader. We follow the trends. It means we follow the trends. It means we are following stocks when they have a big move. And that's where the money is. It means you harvest the money when you are good with the trend. Not the opposite of it. Not the stock is going up, you go to short it. Okay? Don't do the opposite of the trend. And this is how most of the people do. And for us, we follow these stocks and we follow the trends. And when it is time to buy, we buy according to my strategies, according to the market. And we wait for a few days, few weeks, or few months. And then we can make money and then we sell. When the trend has dried out, it means it's not going anymore up. Other time, we sell. But understand there are techniques when to buy, when to sell. And the people who are following me in my subscriptions, I always tell them when these stocks to buy and when to sell. Okay? So I have made list updates, stocks updates list, and we do a search each week, and I show them the market, what's going to do, what is doing now, and what we expect in the future, and when to buy if the market is going good, when to sell if the market it is bad. And this is how to proceed with that. You need to be in the market. It's not you buy a stock and after 1 month you come back and you see what's going on in the market. Have I made money? Yes or no? This is not trading. Okay? You should follow your stock. For example, for us, we are following the trends, so we check it daily. At the end of the day, we don't check in the morning, because in the morning it can go up, in the afternoon it go down. So we are not going to check in the morning. And we don't buy in the morning, we buy at the end of the day. Either we sell or we buy at the end of the day, because it shows us the signal. Is it to buy or is it to sell? And this is how we do it. Okay? So thank you very much, guys. Do you have any question, one question or two? Because it's nearly 52 minutes. So I'm just waiting for you guys to have one question or two for me. And we have spoken last week about presidential. And I told you either it will be a good year. And last week, since this week, the market has gone above last year close, so it is green. So now, last week, you see that the market, I have explained this, the Dow Jones was red. This week it is green, and I told you last week that if it goes above the last year close, you will the market will be green for the year. And now we are green, and hope we continue to be green for November and December. Elia Palavan, which industry perform better in future, you think? Now, Elia Palavan, I don't predict the future. Okay? If you want to understand what I am doing, you should follow me in my training or my subscription. It means you go for example for 1 month and you follow me. I explain everything and how to do that. Now, if you want to check, there is training level 3, which is how to search for stocks using an industry index. It means you should see the index, you should see the stocks, and then you choose which stock is better. Or you can check all the indexes that are on the chart, and according to my strategies, you will see when to buy and when to sell. Okay? And understand that industries are not the same. Sometimes you find industries that are going up, but you find other industries that are going down in the same market. Okay? Right now, for example, there are some industries that are doing bad, but there are some industries that are doing good. In my training, in my subscription, I always show that, show the industries and show you which is good and which industry you can go and find stocks. Or you can use my search criteria and you can find stocks daily. This is the easiest thing you do, just to understand what is going on and how to do it, and then you will do it by yourself. So it's not a big deal, but you should study, you should practice until you have experience. It's not because for me I can't predict what is in the future. I don't know what is going on in the future. I see the chart and I make conclusions about what I expect. But if I buy and what I expected is good, so I will stay. But what if things change? I will change. So you should be always ready to change your mind. It's not investing. It's not investing that you buy a company and you stay 20 years with it. For me, I am a trader. I buy in order to make money. If I buy something and doesn't go good, it's against me. I will sell it and buy another one. This is how I work. Okay? Yes, as Saba said, there is no easy money. There is no easy money. You should work on it. There is no a trick or magical formula that makes you the money. Although, no. For me, when I buy stocks, even when I show them in my trading account, I will show the stocks. Some stocks, they do bad. I sell them. I buy another one. They do good. So it means the people, they see me buying, but you will see that the account is going up and up and up. This is the most important thing. The most important thing is to see your account making money through the months until the end of the year. It's not you. Don't focus on one trade and you put all your money and you want to make millions of dollars when you have $1,000. This is a stupid idea that was in online on YouTube for many years. Okay, it was into the 2000 when we have this. I just told you about .com companies. Companies, any company that it is .com, it will fly like a rocket, and people, they make a lot of money. Yes, it was at that time true, but it's not anymore. And a lot of people, they lose all their money because they think it's easy. So trading, it's not easy. It becomes easy when you understand. But before, you should understand first, and you should practice, you should learn. And later it becomes easy. It becomes easy because you understand what's going on in the market. Okay? NASA, is your performance this year your best performance? No, it is not. No, it is not. It's not my best performance. But there are some years when the market is doing so good, and I always search for the leaders, I can make more money. Okay? So, but years, you understand that years are not the same. They are not the same. If the market is all bad, you should go to do more selling short, and this is dangerous for your account. And some people, investors, they always buy on these bad years. They buy more and more and more. Okay? Elia Palavan, your view helped me a lot. You are really great. You are my great guru. Thank you very much, but I am not guru like those guys who are living in a cave and they are guru and they understand everything. So for me, I am just a trader. I understand the chart. I have my strategies. I try to practice as much, and I am always learning new things, because the more you see, the more you learn, and there is no something that's something that makes the money. You can make a lot of strategies and all, they make the money, but you should understand the basics of trading. Because basics of trading are almost all the same. Okay? And most of the traders, they use the same thing with different techniques, but they use the same thing. Okay? Saba said, when you can read the charts correctly, it gets little easy. Yes, just you understand what's going on. Because for me, I don't want news. I don't watch. Sometimes the company, I don't know even the name of the company. I name only the ticker. You know, last year we began with Zoom. When it is an IPO, we bought it in our trading account, and the people, they see we make a lot of money 2 months or 3 months before it goes down. So at the time, I see Zoom, but I have never thought it was the Zoom that we make video. It's like you use for videos. I don't know that it is that company. But I see it is just Zoom. It is Z-O-O-M. I don't care what is this company. And later, this year, when it was going up, and they say, oh, this is Zoom. It is used in video by people. Oh, it's that. So I don't know. One time, this is the funny thing. I traded a stock called WW2. So WW2, it's the World Wrestling company that they do wrestling. I don't know that it is wrestling. I thought it was a company about history, about when we say WW, I thought W, it means like a World War II or something. This is what I thought. I didn't even look at the company. I don't look at the companies. That's why some people, they get strange. They say, how do you trade and you don't know the company? I say, what for? Okay? I say to them, what for? If I know the company, does it make me money? No, I am not making money because I know the company. I'm making money because of the chart. That's it. The price. I'm always on the price, looking at the price. I don't care about what the company is, because there are IPOs, companies that are new in the market. They come each day. No one knows about them. So I don't want to study a company and to go fundamentals and to see who is the CEO. What does this company do? Yes, I can know that it is, for example, the industry it belongs to. Yes, I get interested in that. Yes. So, for example, it is a drug company, or it is a bank, or it is an insurance, or it is a retail. Yes, I can see that. But it doesn't mean that I should know the name of the company and what they do and how much money they make. Because the company, when they make money, it is their company. I am not owning this company to make money with them. I am only making money with the price of the share that I bought. Cheap, and it goes higher, I make money. That's it. So believe it or not, that's what I do. Thank you very much, Nasa. You said you are stock guru. Now I try just to keep you guys with what's going on in the market, and don't be fooled about the news. Don't be fooled about the news, and they say buy this stock, and you just buy, and the next day you have a gap down and you lose all your money. So stop thinking about this idea about a sure thing. This is what makes all the beginners lose their money. It means they think that there is there is a magical strategy. There is one guru who knows everything. No, it doesn't. It doesn't. Trading doesn't work like that. Trading is about risk. You should know how much you risk in this stock. For example, when you are in earning news, let's say today, Facebook or Apple or Tesla has an earning news today after the market close. You understand that you are in the danger of having, for example, a gap down. Who tells you that the stock tomorrow will have a gap up? It's not because if it is Tesla or Facebook or Apple that always they have a gap up. Sometimes they have a gap down. and you lose 10%, 20%, 30%. You lose a lot of money. You don't expect it. Tomorrow you wake up and you see everything is red. And you say, oh, it's Wall Street, guys. They took my money. This is stock market is a scam. Trading is a scam. All the people here are scammers, and they took my money. No one has taken your money. It is you who don't know how to trade. So don't blame others. Blame always yourself for not trying to understand what's going on. Okay? Yes, you said, Nasa said you are chartist. Yes, I am chartist. I am always looking at the chart. Saba said the sure things when chart tells you in that moment. Yes, so that's why sometimes I have a list of stocks that I do even in my subscriptions, and I will tell guys, if this stock goes here, buy. If the stocks goes here down, sell. Do not say. So I will tell them the best practices, but I will give them the reasons why. Because for me, my strategies is based on real things. It's not just on intuition. It's not I predict that the stock will go up. No, I don't predict anything. So I have no relation with prediction. I have never predicted anything. Now I can expect that the stock will do good, yes, but I don't predict that it will do good because I don't know. How can I know the future? If I know the future, I will be a billionaire in few days. I put all my money into this penny stock, which is 5 cents, and then next day it goes $1 or $2. I will be a billionaire if I know the future. No one knows the future. Even tomorrow, we don't know that we live tomorrow or we die. So how can you predict things? And stop following these guys that they say this year is good, this year is bad. They just talk. If they know the future, they could be better. Okay. So thank you very much, guys, for coming. Although I didn't mention that we have a live, but expect a live always on Saturday or Sunday. Most of the I do on Sunday. I'm trying just to help as much as I can to understand the stock market. So thank you very much, and be careful for next week. It will be also volatile, and I always, for my subscribers, I give them all what they should be aware of for next week and the other weeks. And hope the market is doing great for November and December. But anything can happen, so you should expect that. Okay? So thank you very much and have a nice day.